Hey guys, making another video today. This one's called Why Waiting is Almost Never the Wrong Answer. This is about just being very selective with your setups, with your trade selection, and your entry criteria, and why, more than anything else, why just waiting for very ideal conditions is a big key to becoming profitable in the market. So I have my master chart file open. So I have these master chart files that are separated by quarter. So this is my 2022 quarter one. I've showed this, I think, in my old videos, but essentially I just take every single microcap gapper, and you can do this if you're getting into other markets. You can have a master chart file for swing longs or for EPs or for different markets and different setups, but this is for my microcap trading. So very recently, the market has gotten very weak, and that's because the microcap market moves in cycles, just like any other market moves in cycles, right? So it goes from very strong, like we saw from end of October, once like DWAC kind of invigorated the market with a huge black swan event. Lots of sympathy plays, lots of liquidity. Also, at the same time, the overall market, the SPY, the Qs were going on a big run. Lots of money just flowing into the system, creates a very strong market. And then that lasted actually about 6-7 weeks. Then we went into a more neutral market where things start to become weaker. Things are still gapping up. This was about mid-December to mid-January. We had things gapping up 60, 70, 80, 100%, but a lot of morning fades. It was a great time. It was a fantastic period. If you like shorting in the morning more than shorting in the afternoon. Stronger markets, shorting in the afternoon is more the play. Neutral markets, short in the morning can be a good play. There's still in neutral, there's still some strong stocks, and then weak markets, you have to short in the morning because there's almost nothing pushing during the middle of the day, and that's actually very relevant to this topic about waiting, like waiting for the right moments to know. It's like, when should you be paying attention the most? What type of price action should you be waiting for? And what type of signals, entry signals, are better given the market conditions, right? But this thing, what I want to talk about today is like, people always asking like, oh, Jason, did you get in on this bounce when it pulled back? Are you shorting, lower highs? What are you risking? All this stuff, and really, the answer is I just have a few very basic setups that I've revised over time. It's the same stuff you see on my Twitter. Go follow me on Twitter. It's Jason Rakowski3. The link, or at least my Twitter handle, should be in the description of this video. But in terms of topics of waiting, here's a zoomed in chart, 1 minute chart of TCBP, which ran yesterday, right? Weak market, as you see, morning fades, happens very fast, super thin, relative to what we've been seeing recently. But the thing is about trading, especially if you trade on the 1 minute. I find the 1 minute very, very important in microcap trading, right? There's a lot of people say there's a lot of noise. Some people like trading on a 2 minute and 3 minute and 5 minute. I do admit that the 1 minute probably has the highest skill level in terms of cutting through the noise and waiting for the correct signal to act upon. And a lot of people just find it easier to use the larger time frames, so they're not as influenced by all these little movements in the stock charts, right? Especially in these like more thin stocks, where this is classic thin stock action, man. This is how like really thin stocks move. And so in relation to waiting, if you look at this chart from 9:30 to 4, that's what it's 6.5 hours of trading, right? And 6.5 hours of trading, 60 minutes in an hour. Hope I'm doing all this math right. That's 390 minutes. So that's 390 candles, right? And the truth is, very few of those candles you are going to want to act on, like ever. Like you're ever going to want to act on. Few of those candles will actually give you a good enough signal, given the market conditions, given patterns within those market conditions, where you're going to want to act. And what that simply means is, if on a trade like this, maybe I might have a couple entries throughout the entire day. That's two entries over 390 candles. which simply means more than 99% of the time, uh, you are not going to be acting. You're not going to be taking action. It is not. It's just not the correct time to do so, which means waiting, just waiting, is the correct answer the vast majority of the time. The vast majority of the time, just waiting, like not doing something and waiting for your criteria is the correct answer. Like, and I've had problems, definitely, in strong markets, because in strong markets, stocks tend to go up in the middle of the day, right? Stocks tend to retrace and make big pushes. Let's go to November, right? Let's go to after the microcap market kind of woke up. Let's see what type of price action we're getting. Here, just random chart. Here you go, random chart. You're not seeing this in the current microcap cycle at all, because there just isn't this amount of liquidity in the system, right? So actually, I remember trading this. I remember trading these VWAP clearouts, these VWAP rejects, and making a little bit of money. This isn't exactly the biggest. I mean, nowadays this would be in February. This would be a gigantic pullback, but at the given time, this was just a little trade. But in very strong microcap cycles, taking constant action in the morning is a recipe for taking a lot of losses. Whether you're the type of trader who likes to short down here and risk 8 to 10%, like you're risking these highs up here. I'm not that type of trader. I'm the type of guy who likes to get in on these candles as close to the top as possible and just risk. I like tight risk with big size. The last thing you want is big size with big risk, right? If you're going to be, the bigger the size you need, the tighter the risk you need, right? Otherwise, your account's just going to absolutely blow up. The other option is to use way smaller size and have bigger risk, right? So someone like me, I might do big size and risk literally 2-3%, probably under 2% of my position, right? Where some people might like risking 8 to 10% on a lot less size, right? So getting back to a strong microcap cycle, if you have tight risk like me, you need ideal price action, ideal entries, something very clean that you can hang your hat on, and you're going to have to be the person who is able to say no to, just like I said, 99.9, probably 99.5% of the situations. You're saying no. Like this 1 minute candle, no. That 1 minute candle, no. You're just saying no. Given the market conditions, given your setups that work in those market conditions, you just have to have that patience to wait for something very clean, right? A lot of traders talk about, the successful traders talk about clean action. This, not very clean. There's not a whole lot of clean action in this chart once it went on big moves. And if you're, especially in strong market cycles, if you're expecting clean action on big moves, you're making a lot of entries and you're not waiting for something that is clean, you're just going to get chopped up. You're just going to take losses, and I've had those problems myself. So something in a strong market cap cycle, which I would consider to be pretty clean, would be something like, see if we could find something that's like quite decent. What's something that would be like so obviously good? LGVN, here's a very clean high day clear out, right? And this was already on like a huge, if I remember right, this was on a big multi-day run. Yeah, this one, going from 3 to 15. Day two, there's a lot of day two fades in this period. You have to pay attention to the current microcap theme, as Trader Matrix would call it. What types of patterns are being endlessly repeated in the microcap cycle? They tend to be repeated for 2 or 3 weeks at a time, but then they go away. This is why clearouts tend to come and go, and other patterns tend to come and go. So here you got a really nice high day clearout happening on a day two pattern, which day two fades were happening in the morning during this market cycle, and another little VWAP $12 hold dollar. Didn't exactly break VWAP, but it did break $12. And I remember shorting this move, adding to my move, and I remember it not getting completely filled on this trade. But yeah, this is an example of knowing when to push the gas pedal, because if you're trying to just short, okay, this pulled down, and you're trying to short down here, and you're trying to short down here, a big part of waiting is accepting the fact that sometimes you're just going to miss moves. You're just going to miss those moves. A stock is going to go down, and you're going to be like, I want to wait for something more ideal, and it's going to go more down. And sometimes it comes back up and gives a nice little, VWAP whole dollar clear out that immediately rejects and falls another, 20, 25%, and you make a lot of money, and sometimes it doesn't, and that's okay. And because you have to recognize that by not waiting and by chasing, obviously, chasing down here and chasing down here would have worked. There's many times where it's just going to go up. You're going to get choppy action like this, and if you're the type of person who has crazy wide risk, good for you, but you're going to take huge losses when that risk gets hit. So I really just thought, oh yeah, here's a really nice bid. I shorted this for sure. This is a really nice bid prop. Midday bid props are really, really common on really strong stocks. Essentially, bid prop is very long consolidation. I should make a whole nother video about this, but on strong stock patterns. But essentially, but this is, for this video, it's a sign of clean action of more than an hour and a half of straight consolidation after a big move. I often have a quote that I say on my Twitter page. I say, the longer a long takes to work, the less likely it is to work. And that's often because in microcaps, what people would consider obvious bullish patterns are actually gigantic long traps to dump a bunch of stock on. So here you got a bunch of higher lows, big move, higher lows, tons of tons of short traps that keep pushing. Tons of liquidity in the system, right? These types of 2 million, 3 million float stocks can just go to 20. They could go to 30. They could just keep going higher and higher, and it's a perfect situation to trap a bunch of longs and dump on them. And I remember shorting this. I remember shorting once it gets long. Once it starts getting over here, I start shorting and risking the lower highs that it's putting in. So I have a really tight risk level. I could go really big size. I'm only risking 2-3%, and then you get these $1 moves in 1 minute, and sometimes followed by a deep fade. Obviously this trapped, went back up, but by not waiting. I've had so many trades in the past where I started shorting over here and I started shorting over here. I think patterns that work in weaker markets, something like makes a big move, clears out the top of this range and pulls back, it produces a big fade. In strong markets, this clears out the range, pulls back, and then immediately pushes. I mean, this is just long trap to short trap back to short trap back to long trap back to short trap, and it's just that is just how a strong market moves. So I'll make more videos. I mean, Trader Matrix wrote a really good article about market cap cycles and the types of moves you could expect in those market cap cycles. But I will say, the stronger the cycle, the more you have to wait for ideal conditions, and just accept the fact that sometimes it's going to be unbelievably choppy, and you're just not going to be able to you're just not going to have a trade throughout that whole day. You just didn't get what you want, and that's okay, because that's going to save you a lot of money. Waiting is going to save you a lot of money. By the way, here's an example of an ATM fade. I remember this. This is, if you ever wonder how stocks go below their previous close and fade in the pre-market like this, ATM taps. I remember shorting this in the 10s and wait straight down. Active ATMs, especially recent ATMs, this is the type of action they produce. Get kind of off topic, but yeah, the point is, and then in weaker cycles, you could short. Here's like a big push. I was annoyed by this because on Trade Zero, this had 10-cent shares on a $2 stock, so I didn't want to pay for it. But these are the types of trades in pre-market. You get one big stuff move, and you could see it's barely trading a million volume, which is like nothing. You can almost, this is, the weaker the cycle, the less you have to wait, the less confirmation you need on your signals, right? And here's a VWAP clear out, went below, popped right above it, instantly rejected. Problem is just not a lot of range, but you can wait a lot less, and in many ways, you don't need as clean of price action as you might need in a crazy, super strong market cycle where things can really, really push, right? In this type of market, you're looking for trades in the morning, which is why KSCP, I shorted this high day clear out right here. It pulled back and then just went back up, and I took a tiny bit of profit down here, and it came back up to my risk, and it was more or less a break-even trade. And then I had stuff to do, so I actually didn't trade any of this. But yeah, hopefully that helps. Just say to yourself, hey, it's okay to miss fades. And waiting is almost always the correct answer. It's almost always the correct answer. Almost always. So just tell yourself that, and you'll save yourself a lot of trouble, because becoming profitable in trading is as much about not losing your money as it's about making money. There's way more chances for you to lose money than there is to make money. Way more, way more. And then you mix in the fact your own personal experience levels and how good your setups are, and the fact that you're still learning and trying to grow, and you start to realize that the more decisions you make, the more likely you are to be wrong. And that's true for me. That's actually true for everybody. So waiting, clear signals, recognizing the market cycle, and then just following your plan. And that's about it. So hopefully that helps. And I'll come back with another video. Thanks.